everybody, what's going on? And welcome to your weekend briefing for the week starting March 20th. In today's show, we're going to take a look at some interesting earnings we've got coming up this week. We'll take a quick look at the macro with FOMC and Jay Powell taking center stage. We'll do a quick update on the banking crisis. We've got lots of charts to look at to get a feel for the markets. We'll look at how some of the setups we've been watching have turned out, and we'll see if we're making any money or not. And we've got a couple new setups in stocks like Apple, and believe it or not, a blast from the past, ARKK. Remember ARK? All right, so we put a lot of work into these videos, so go smash that like button if you don't mind. It really helps us out. And if you're wondering who I am, my name is Kevin, and I'm here to help you make sense of all of this. Okay, why do we do these videos every week? Well, it's to keep our members up to date on what's going on and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and mentor sessions. So check out the link down below in the description and come join us in the Discord. We'd really love to have you there. Okay, first, before we get into this, a really quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's do this. So, first up, earnings. What do we got going on? So tomorrow morning, Monday morning, we've got a few interesting ones, actually. Pinduoduo, of course, Chinese company, reporting before the open. That will be interesting. Foot Locker, I'm sure everybody's heard of them. Another interesting company reporting earnings. You get some nice moves out of that one. And also Douyu.com, another Chinese company that's reporting before the open on Monday. So yeah, should make for an interesting pre-market on Monday. No familiar names really. Profrac maybe, but nothing really exciting after the close on Monday. On Tuesday morning, we have Canadian Solar. Now you'll see later, solar's been hit hard with energy over the last week. So be interesting to see how that one reacts to their earnings on Tuesday before the open. 10-cent Music, that one's always exciting, and Huya. Also Tuesday before the open. After the close on Tuesday, we have Nike. Obviously an important company. A lot of people watching that one. That should move fairly well on their earnings. And GameStop, the old meme stock that's been grinding lower and lower. So I know a lot of people will be interested to see how that does. Wednesday before the open, we have Petco, Ollie's, what is it, Ollie's Bargain Barn, I think it is. They don't have those in Canada, so I'm not too familiar with that one. After the close, we have Chewy. Know that a lot of people like to watch that one. An important one, I think, is KB Home. We've got, the home builders are starting to report now. They're always towards the end of the earnings season. And I think that those will be closely watched to get a sense of sort of how the economy is doing. And then moving into the rest of the week, Thursday and Friday, nothing particularly interesting there. All right, let's move on to our macro and see what's going on. So Monday, nothing. No reports on Monday. Tuesday, we have existing home sales. So pretty quiet at the beginning of the week. But on Wednesday, this is the really big day, of course. We have the Fed, the FOMC meeting. Starts on Tuesday. On Wednesday, they make the rate announcement and release the statement. And then half an hour later at 2:30, Jay Powell will do his press conference. And I think all eyes are going to be on that. It's going to be really interesting to see what they've got to say, not only in their rate statement, but especially in the press conference. I'm sure they're going to be grilling him this time. So we should probably expect a lot of volatility. However, I think that it's a bit of a no-brainer that we're going to see a 25-point rate hike. I talked about this. I talked about this before, and I think they're kind of they've backed themselves into a corner here because they started talking about going back to a 50-point rate hike before the banking crisis started. I really don't think they can go from that to zero, no rate hikes, without panicking the market, without saying, hey, yeah, we might have really screwed up here and we really need to back off, and we need to back off in a hurry. I think that would frighten the market. There'd probably be an initial, huge pump as the algos jump in and everybody else jumps in, going, yay, rate hikes are over. But then once you think about it, once you get into some second level thinking on it, as the market does, I think that would turn around fairly quickly, and we could see a fairly steep decline. I think the best thing for them to do is a 25 basis point rate hike. And we are seeing right now, I might as well actually pull this in here. This is the CME FedWatch tool. And you can see here, we have a 38% chance of no hike and a 62% chance of a 25 basis point rate hike, and then, 0 chance of a 50. So that's our probabilities. That's where they sit now. Of course, as we get closer, those probabilities will shift around, and I will be keeping our members in the Discord updated of how that's looking as we move into Wednesday. All right, on Thursday we have unemployment claims, as we always do, and we also have new home sales. On Friday we have the flash manufacturing, flash manufacturing and the services PMIs, the purchasing managers indexes. So those are pretty important numbers to look at, and will also affect the market. But nothing affects the market, of course, as much as this rate announcement and Jay Powell's press conference. So, speaking of the market, why don't we get right into... actually, we're going to do the banking crisis, weren't we? All right, so where are we at with this banking crisis? Over the last few days, Silicon Valley Bank has declared bankruptcy. They've gone into bankruptcy protection. They're still looking for a buyer. And they're not finding a whole lot of interest. So that's where they're at. FRC, First Republic Bank, another one that's been in trouble, made some really nice moves during the week. Actually, why don't we bring up a chart to take a look at that one. We'll bring up FRC here, and you can still see high volatility in this. These guys got a $30 billion worth of deposits from the 11 largest banks out there. And these are uninsured deposits. These other banks are pouring money in, depositing their money into this bank as a show of confidence. They went up a lot. You can see on the day that all of that was rumored on Thursday, they went up a whole bunch. It was a great day. I made some really nice trades in here on that day. Caught most of that move, which was really cool. Kept a small position on, unfortunately, very small position on, which is, more than free, this position. But pulled back a lot on Friday. They said they were going to cancel their dividend, and they're looking to adjust their balance sheet and whatnot. So there's still a lot of fear surrounding these banks, these regional banks. So we look at, when we can see that when we look at XLF, the financials ETF. We can see maybe we're starting to bottom here. That's good. I don't like Friday's candle. I don't like that big red candle on Friday. However, it did stop at those previous lows, so that's good to see. And we've got some major support just below. So it's the bottom isn't falling out of this yet, but there's a lot of risk here. And then we're going to see a very similar thing in KRE, is the regional banking ETF. And interesting to see that we were making some higher lows, but again, the gap down and then the big red candle on Friday is not healthy. That does not bode well. So it'd be really, really nice to see on Monday a nice, a green candle, even if it's an inside day, just something green, pull away from these lows a little bit. So that's kind of where we're at. It's in the banking crisis. It's basically just a lot of fear still. And it's still really dynamic, but in my mind it is settling down a bit, and I think we can kind of see out the other end of this. That's assuming, of course, that no new shoes drop, and you know how this goes when you're looking so closely at all these banks. Somebody's going to turn up something. So we just got to play it day by day on this. All right, let's move into the markets. We'll look at the major indices, international markets, of course, important commodities, sectors, and stocks we're playing and maybe looking at playing. So let's go to our charts. Let's go to a chart of the S&P 500. We'll take a look at the SPY. And strangely, actually, you know what? I want to go to a weekly. I want to start here with a weekly. Okay. Here's the SPY on a weekly. And you can see there's our downtrend. We had, a short-term uptrend going, and that has failed. And you can see that week before last, we had that nasty red candle with the two bad days at the end of the week, and cut below and closed below that trend line. And this week, we pretty much stayed below that downtrend line. But we do have a nice green candle in here, and you can see that this was a green week. We closed out the week higher than we closed out the previous week, which is a little surprising, considering just how nasty this week was. This is really good to see. This is healthy. I think what's looking really healthy here is the Qs. Very strong week. Look at that bullish engulfing candle after that nasty red week. This is a very bullish candle here, and it's forming a bull flag right on top of its downtrend line. So it never cut through that downtrend line. Barely closed the week before above the 21-week moving average. It barely closed the week before below the 21-week moving average, and firmly closed above it today, and is almost breaking out of that flag. It is breaking out of that flag, and we'll see that more clearly when we flip over to the daily. Now, IWM, of course, is not looking good. The Russell 2000 small caps. This is where so many of those regional banks are in this index, and you can see that it's cut down and closed below its downtrend line. But we're still off the lows here. If we can turn this around here quickly before getting to these lows, that would be really good. If we start cutting below these lows, I think that this index and the regional banks in it could drag down the rest of the market. But I think that's the least likely possibility here. Now, let's go back to our daily charts really quickly, and we can see, let's go back to SPY. So we can see that, it was a very choppy, volatile week for the SPY. But we did move up. We had a really nice day on Thursday, but pulled back a little bit on Friday. But still an inside day here, so that's good. If we can start to calm down, start to reduce some of this volatility, maybe even go sideways a little bit, maybe, a few sideways days between the 618 retracement and the 50% retracement here, I think would be healthy. And I think we're going to see that theme play out in a lot of the charts we look at today, where we're just going to be going, you know what, this looks like it just needs a couple of days of rest, going sideways, then we can make a move out of here. We're going to see that in the Qs. You can see I've drawn what I'd like to see it do. Now we've had, look at this, 4 really nice days here, and then a little rest day. This little doji here, this resting doji, no big deal after 4 days like this. But it would kind of be cool, I think, if it could extend a couple more days out here and then break out. We'll have to see what happens, of course. The market doesn't always do what I want it to do. But I like the look of what's going on in the Qs. The Qs are looking really strong, and I really hope that they can continue with some of this, strength. Let's take a look, just really quick, another look at IWM on the daily. And you can see that this is coming into a support zone here. It's below that downtrend line, unfortunately, but it's so far finding support at that previous little double bottom that it had there before it started its last rally. So this is good to see. And again, if this could just go sideways, maybe get up to, just under this 175 level, go sideways here for a couple of days, and then break out to the upside. I think we'd see a nice healthy move. Volatility index, obviously this has spiked up. It's still holding up fairly high, but not looking too bad. We didn't break through that long-term downtrend line in volatility. And we are kind of making some lower highs here and lower lows in this over the last week. So if this just starts, continues to bleed down here, I think that's the best we can hope for in the volatility index. The 10-year yield, this one is at what is becoming a fairly strong support level here at the bottom of this old consolidation. That's fine. This is down quite a ways. This is telling us that we're seeing the end of higher or the end of the hiking cycle is coming to an end. Now, they're not saying that for sure it's going to be zero at this meeting, but beyond that, the bond market is telling us no more rate hikes beyond this next meeting. The bond market is saying 25 basis points at the next meeting on Wednesday. Let's take a look at our U.S. dollar. And that is chopping sideways, very much like the markets going sideways. We've got a bit of a consolidation here under that trend line. We're going back and forth across that old trend line, really, isn't it? But consolidating a bit under it, but above major support. It would be kind of nice to see this roll over. That would be good for international equities, good for equities in general, North American equities too, to see this dollar roll over a little more. Also good for some of the commodities out there. If we look at our global markets, and this is ACWI, this is the entire global stock market, basically, and we can see we're kind of hanging in. We're hanging in. It's hit that downtrend line, found support there, and consolidating a bit. A little choppy, volatile in there, but consolidating. We take the U.S. out of the picture. So the rest of the world, and again, even choppier, I think, below a support line, but above. I guess I should get this support zone in there. Bear with me one sec while I do that. Comes from right about there, I'd say, yeah. Above that support line and above the 200-day moving average. So I think we can expect a bounce higher from this one. EFA, Europe, Developed Far East, and Australia. That fell below a support line. It needs to get back up here and get off the mat. And the sooner the better on that. Emerging markets, excluding China, fell below its support line, but quickly took it back. Best thing we could see here probably is a little bit of sideways consolidation. And China large cap. China just sort of grinding sideways, not really doing much of anything here. Obviously not as affected by a regional banking crisis in the U.S. Their economy is very separated from that sort of thing. We'll see what happens after this consolidation. It's good to see that is supporting right at its downtrend line, but it'd be nice to get back up and close this gap off nicely. Let's move on to some of our commodities. Gold is really strong, of course. There's definitely a flight to safety going on here. There's a flight to gold, and there's also a flight to crypto, especially the larger cryptos, Bitcoin, Ethereum. So this is approaching highs we haven't seen since back in, basically last year, about a year ago. I think we will continue to see this go higher as long as uncertainty remains in these regional banks. What's interesting here is, I want you to notice how gold has basically closed above, made a high close above here, these January highs, and really coming into the highs from April and March of last year. But when we look at the miners, we don't see that kind of strength. I'm not entirely sure what this is telling us. I think that, it's telling us that, stocks are weak, that money would rather be in the commodity than in the stocks that mine it, that produce it. Now, if gold continues higher for any length of time, these gold stocks will move higher. They'll have to kind of catch up. So maybe there's an opportunity here, but it is risky because, people are sensitive to a lot of stocks, and especially smaller stocks. And most of these mining companies are fairly small. So yeah, if you have high risk tolerance, this could be an area to look at, these gold miners. Silver, nice move here. If it ever pops up, there we go. Yeah, making a move similar to gold, but again, much like those miners, silver itself is still well below these highs from earlier in the year. And copper seems like it can't really decide what to do. At least it's holding above that trend line, but it almost looks like failure is imminent here, and that probably wouldn't be ideal for equities if this broke down. Let's move over to crude oil. Speaking of things that are breaking down, nasty move here in crude. Big gaps down. Trying to find support at the 66.50 level, which goes way back into, was it last year or the year before? Yeah, late 2021, and even further back. This is a really important level, this 66.50. This really needs to hold. Now, Biden, during the week, the White House reminded us that they were going to start refilling the SPR, the Strategic Petroleum Reserve. Don't know if they have, but they said they were going to, and they've been saying that a lot and not coming through on it. So, who knows? I think we'll find out when we get the API reports during the week. Maybe we'll see. Maybe we'll get some hints or find out if they have actually started refilling that. If they do, that should really put a floor here on the price of oil. Natural gas is also rolled over. It's still at the support level from this consolidation. It's still actually well inside that form of consolidation there that it kind of did a fake out breakout on. But not looking good. Nasty red candle here and could continue lower and test some of these support levels and that low there. All of the energy ETFs that we watch are completely falling apart now, but it is kind of looking a little like capitulation. And had a nice bounce here on Thursday. So if this level holds, maybe the bottom is in oil itself and all these oil stocks. Jury's really still out on that. I mean, this is still, in my opinion, this is still catching a falling knife here. But look at this volume and on that, accelerated move down. This does look a little like capitulation. XOP, very similar looking pattern here. Just a waterfall, big plunge down and an attempt at recovery. Interestingly, with this one at the bottom of this channel, where you expect to see a bounce. And look at that volume again, right? Capitulation kind of volume here and capitulation price action. It's possible the bottom's in here. And OIH, same thing. Big, huge move down. Really ugly move down in this one. And on big volume, but trying to bounce, trying to find some support right there. And in an area right where it should. 10, it's moved down too, of course, with energy, and if you're into uranium, that one's moved down as well, right? 10 has broken through an important support level and coming in and closing this gap down here. So, 10, the solars do tend to be even more volatile than a lot of the energy stocks, and we're seeing that play out now. Is this going to find a bottom? I think that really depends on if oil finds a bottom and if those oil stocks find a bottom. This is an area where it should be finding a bottom, but it may come down lower into the 65 area. Some of the individual solar stocks look pretty ugly too, so there's no point looking at that. Let's see. Let's move on to our major sectors. So this is consumer discretionary. You see, it had a pretty decent week. It was green on the week. It's good to see. Nice few up days and then taking a rest on Friday. Industrials, after their kind of ugly breakdown, they are trying to find a bottom here. Not quite as good looking as some of the other sectors, but you know, you can see almost tagged the 200-day moving average and bounce there. So I think we're seeing some bottoming, or the beginning of some bottoming action here in the industrials. Financials we already looked at, but just in case somebody skipped over that part, these are the financials. They're not looking great, but they are trying to find a bottom. KRE, same thing there, regional banks, trying to find that bottom, right? XLV, healthcare, maybe finding a bottom, turning up off a low. Got to get back up and got to get through this 21-day moving average right here and the downtrend line from that channel and back up inside there. You know, with this big red candle on Friday, it doesn't look so good, doesn't bode well for getting back up into there just yet. Maybe this just needs to go sideways for a few days to build some energy. A few days or weeks, actually. This was quite the plunge here, so give this one some time to get set up again. Same goes for biotech, you know, part of that sector. But looking like it's trying to bottom in here. You know, had after this nasty few days down move here, had a nice reversal and has come back up. So yeah, potential bottoming action here and right where it really needs to. XLRE, real estate. We're getting into some of the defensive names. And they kind of went sideways through all of this mess. I don't think we'll see these really go any lower here. Unless, you know, this banking crisis expands. XLP staples, just chopping sideways. Choppy price action, moving sideways, not going anywhere at all. Same goes for utilities, if I remember correctly. Yeah, okay, moved up through the week, but you know, we don't need to see these outperform. The one we really want to see outperform is technology. This is obviously, you know, what the Qs is loaded with. You can see the technology had a nice, strong week, but found some resistance at the top of this consolidation area before, where it couldn't get through and then kind of fell apart. This is not surprising. It has found resistance after a strong move up into there. I think it's important for technology to go sideways for a few days to a week or whatever, and then try and break out of there. So I think we'll probably see a little bit of a move, you know, something, whoops, yeah, something like that in that area. Okay, let's take a look at communication sector. Also had a really good week. Also came into a really minor resistance level, but you know, really couldn't get out and close above Thursday's highs, and looks like it just needs to take a little bit of a break here after a good move. Semiconductors. This is probably, to me, the most interesting area right now. If you've been watching my videos, you know that we played AMD, and we'll look at that in a little bit. But you know, this is looking really strong here. I like the move back up into this area. I'm not surprised again that it found some resistance right there at these highs. And again, I think there's a chance, and it would be healthy if this just went sideways for a couple of days and then broke out. I think this one can just break out of here, though. I don't think it's necessary that this one goes sideways for a couple of days. I think on Monday it could just go, and I think that could be a fairly strong move. And we'll look at some of the stocks in there in a sec. First, though, we're going to look at the FAANGs, and you can see that Meta tried to break out above that pivot on Thursday, was quite successful, closed well above it, but then gapped down on Friday and closed just below it. So this kind of hints at perhaps Meta might be rolling over, but it's still really early. I think we're really going to have to watch the price action on this one closely early on Monday to get a clue to what's going on here. And this has been one of the ones that was kind of leading those Qs higher. Apple. We're going to take a much deeper look at this in a few minutes when we look at our setups, because I like the way this looks. I think it needs a couple more days, but I do like the way it looks. Let's move on to Amazon. Amazon, nice rounding bottom in here. So this is good to see. Strong move over the week. That little red indecisive candle that we've seen a lot of that printed on Friday. Again, a little bit of sideways action, then move up and go attack that gap. Netflix, the jury's out on this one. It was so weak. It was weaker than all its peers, and for a while, and even broke through that uptrend line, and now it's trying to retake it, but it failed. It did successfully retake it on Thursday, but then failed on Friday, and right at that 21-day moving average too. So I think the jury's out here. This is looking very indecisive, and again, another one of these stocks that maybe just needs to go sideways for a bit. Google. Really nice strong move through the week. Notice the difference here? Look at Friday's candle. It's actually green on Google. Now it did tag its declining 200-day moving average and stop there. And that is one of the reasons I'm going to say, take a guess, go sideways for a couple days, Google. Microsoft. Really, really strong move. This is by far the leader in the market this week. Really strong move here, kind of on the whole AI thing. Indecisive on Friday, but big gap up. It held it. It held that gap. Bit of an indecisive doji. Not surprising as it comes into that gap resistance there. And again, the healthiest thing for this to do is to go sideways for a couple of days. And Tesla. I'm really torn here on Tesla. So, it had such a nice move up. It consolidated. It kind of rolled out of that consolidation instead of going higher. Didn't come down that much really, and came down into its 50-day moving average, and it bounced there. And now we're back up into, look at this really tight consolidation. We've had 4 days of really tight. What is our ATR on Tesla? Is about $10, and this range, 78 to 87, 87. So about $9. So it's had 4 days at less than an ATR. That's really tight for this stock. So I think, I was really torn on whether to put this on our, potential plays list, stocks that we should be watching for, some sort of breakout. And I'm torn. I think that, it really depends on your risk tolerance here. I think you could play this either way. I think the shorts could play a breakdown, and I think the longs could play a breakout to the long side. And especially if the market is rallying, say for instance the market is rallying on Monday and this gap's open, gap's up a little bit, gap's up below the breakout, say, maybe did a little intraday consolidation right there and then moved higher. That would be something that would be really interesting and get me interested in thinking about taking that play. And if the market is weak on Monday, then maybe you could short that breakdown. So tough call. It's hard to say which way that's going to go. It looks very indecisive, and it may continue just sideways. If the market is doing what I want it to do, then Tesla's probably going to go sideways inside a range here too. And then I would get a lot more interested in playing a breakout to the upside. So put it on your watch list for next week. Maybe down the bottom of your watch list. I think there are some plays that I think are more interesting. So let's look at some of the plays we've been watching. Take a look at HIMS here. So HIMS, after a really nice strong rally, big move up, it pulled back a ways. Not really surprising, right? It closed that gap last week that we had from over there. Pulled back more than I would have liked. It would have been really nice if this 9 level had held, but it didn't. But my line in the sand was a close below this gap fill. And you can see it came right down to my alert, triggered my alert. But it was nowhere near closing. It got there and it bounced strongly off of that intraday, which was really good to see. Really healthy move. And then the following day was up, I believe it was 14% the next day. And then on Friday, printed a little tiny indecisive doji here, which is totally fine after going up. This move in total is well over 20%, I believe. Let's just measure that. So off of the low, you know, up into that high, yeah, 25% in 2 days. That it pulls back a little bit there is no big deal. Really happy to see that strong move away from there. So yeah, still worth watching here. I think, and again, total broken record. Go sideways for a few days and break out. I'll probably add to my position on that breakout. Okay, ACVA we've been watching, and this sort of has just been this thing has been a grind, basically. It hasn't really broke out yet. We were looking at it right here, looking for a breakout from these highs, and it did. And then it pulled back a bit, and now grinding higher. But look at this nice series of higher lows here on these candles, and developing a nice flat top. So it's getting really interesting again for another play here. So obviously, you know, looking at a breakout above these highs, and with a stop below the low of the previous candle, that you're going to want to move up really quickly, probably you know, probably to just below an intraday low on the day you get in. NVIDIA, one of the semiconductor stocks that we have been watching closely, and we're watching for this breakout that we got on Thursday. I know a lot of people played NVIDIA. I played AMD on that breakout, but nice move. Not a ton of follow through on Friday, but it still it more or less held its gains. Don't like to see a sort of gap and then go nowhere kind of candle though. It is a little tiny bit sketchy in there, but because I like the sector right now, I think we're going to be okay. I'm just going to adjust this trend line while I'm at it. Put that there. That's better. Okay, so that was NVIDIA and AMD. Start talking about this one early in the week, and that had a really nice breakout. I bought this right on the breakout right here. Got a nice entry on this on Wednesday, and really enjoyed the ride. Now on Friday, as we came up to the highs and just started pulling back, I sold a little piece of my position. After a move like this, as soon as you see momentum start to slow, I like to sell off, you know, a quarter to a third of my position, and I sold a quarter of this AMD position here. I do think this is going higher, though. All right, let's move on to some new setups. So Apple, I hinted at, we were looking at. I like the flat top here. You know, we've got a clear resistance level right here. I want to zoom in a little bit more on this. Okay. We are in an uptrend, you know, an intermediate term uptrend. I should actually have drawn that on the chart. Sorry about that. You can clearly see that uptrend there now. And we have an inverse head and shoulders. Now, some of you may think this is bearish or whatever, that all head and shoulders are bearish, and that's not at all the case. This is a continuation pattern. So when you see an inverse head and shoulders in an uptrend, that signifies continuation. That, you know, the uptrend is pausing, it's taking a rest, it's building a base, and then should continue higher. So this bodes really well for Apple, because, you know, we should get a move out of this, depending on which school of thought you're in. That move could either be, you take the low of the head and shoulders to there, and then you just drag that line up. If I can grab it. There we go. Take it to your breakout point. And that takes us right up into the 170 level, which is right at this gap resistance area. A very reasonable target in my opinion. Another way that you can look at this, because this is, you know, a continuation of an uptrend, we would measure that whole trend. So we would then measure from the low of that trend up into this high, and then we would go back to the the low of that, right there, the low of that pattern, and that takes us out to, look at that, an all-time high. Another, I think, in longer term, another reasonable target. And it's interesting how that measures exactly to that all-time high, where you would really expect to see some resistance and it potentially roll over. So I'm not bullish enough on the market right now to say that, yeah, you know, Apple's going to a new all-time high. I'm just saying that this is one of the ways that technicians would measure this move. But in the short term, I do think Apple will break out here and make a good move, a good playable move. But before it does that, I'd like to see a couple of sideways days. All right, moving on from there, let's move on to ARK. I bet everybody's really surprised to see me mention this name. Let's back out here and look, get some, context. All right. So, we had the crazy move up, pull back sideways, and then the crazy move down, the massive decline. And it's, come back, the decline tried to hold at the lows of this range, couldn't, came down a little bit lower and is, coming back out of there and then back into this old range again. So, this is healthy bottoming action here. Not saying this is the bottom, but it is definitely healthy bottoming action. And, I'm not expecting this thing to go, go back to the moon anytime soon or anything. I think best case scenario on a breakout would probably only be up to, absolute super bullish best case, this 52 level here, the top of that old consolidation range. I think even that's asking too much because there's a lot of overhead. This stock has a lot of baggage. There are a lot of people who are underwater on this, and I bet you a lot of people are still holding this, and they're well underwater, and they're going to be selling anytime they can get near break even. They're going to be selling when it gets there. So it's going to be a long, tough slog for this to go up, but on a solid breakout, this could really go up. So let's dig in here and see, what I sort of think could happen. What would happen? What is going to happen here for me to want to play a breakout in this? And I'm looking at this 200-day moving average here that's now flattening out, and I'm looking at a sort of consolidating just below it. What I'd like to see is for us to go up here, go up a little bit more, maybe tag that, but not just drop off a cliff and roll over, which is a distinct possibility, but consolidate sideways for a week or even two. If we could go sideways for a week or two, get really tight in here, right on the 200-day, and then break out, I think that could give you an explosive move. Certainly to, up in these highs here. So, up around 44. So what is it? What would that give us? From 40 to 44, that's a 10% move. And that would happen in a day or two. So to me, it's worth watching. It's worth putting an alert on and keeping an eye on it. But I really think for this move to work and have a hope of continuing higher, maybe even up to 47, like I said, super bullish move would be 52. I think it's got to go sideways. So that's ARKK, and the last one I want to look at is ARDX. This is a risky little biotech. It's a $4 stock, but look at this uptrend. It just keeps stepping up, right? We go up a little bit, we go sideways. It breaks out, it goes up. We go up, we go sideways, breakout. It's been doing this for 9-10 months now. Just solid. If it ever, any time it gets below the 50-day moving average, in fact, this is the only time really it got close to the 50-day moving average. You can see that most of the action is on the 10-day and the 21-day moving averages. And, we've recently had another sideways move. It gapped up on earnings, moving sideways some more, but we're putting in those higher lows here, and we've got a nice flat top level here for us to break out of. So let's zoom in on that a little more. You can see we had a bit of a hammer candle here on Friday, and what makes this really interesting right now is this volume. Look at that. Where did all this volume come in? Does somebody know something here? And because the stock didn't go up a lot, now granted the market was down on Friday a little bit, but this to me suggests well-behaved buying, because we had a really tight little range here on all this volume. So this could be a big player. Some good well-behaved volume in here. If it is a big player, they may know something, which suggests to me that this is if this breaks out, this is a very playable breakout. So a couple ways to enter this. You could go in early above the high of Friday's high, if it doesn't gap up. Or you could wait until it gets out above these highs. So Friday's high was, there we go, 408. These highs were 415, I believe. Yes, 415. So somewhere between 408, 415 gives you a decent entry. 416 or 17, actually, if you want to get out above these highs. And then the stop, well, your initial stop is going to be obviously, and your position sizing stop should probably be like 385, just below the low of Friday's candle, and that's just above that 10-day moving average as well, or sorry, that's just below that 10-day moving average. And again, I think that this should make a pretty strong move, a strong initial move. So I would want to move that stop up to break even ASAP. Would certainly want to move it up to, if there is a decent move, like I think there should be, I would want to move that stop up to just below the low of that day's intraday low. I think would just be a safe place to be, so that if it does just turn around and fail, it would be a very small loss for you. So obviously none of this is investment advice. You do these trades at your own risk. I'm just showing you, how this could play out and how I would play it if it does. So that is all the charts we've got to look at today. Oops. Let's take a look at what we've got coming up here on Wednesday. For members of our Discord, check the link below if you want to join. On Wednesday, we have our Ticker Talk live session, where we walk through charts that members in the session want to go through and really talk about anything trading related, any questions anybody has, how they might play certain things, and we'll look at these plays that that we're keeping an eye on as well, especially if we got entries on them. So that's coming up on Wednesday. Come join us if you like. And then finally, we have reached the end of the video. I want to thank you if you've made it this far. Hit that like button, share with your friends, and subscribe. Hope everybody enjoys the rest of the weekend and has a good, strong week ahead. Thank you so much.